Hi, everyone, and welcome to this live stream, which is at a quite an unusual time for us. It's the market is actually closed, and it's late on for us on Friday evening. But there's a reason for doing this live stream at the moment because the mar the markets are at a very interesting point. And the topic for this live stream from myself and David is to look at anomalies because anomalies are one of the cornerstones of volume price analysis. And perhaps for those of you who are coming along the first time or haven't read the book or know a little bit about VPA but haven't gone into it uh, very closely. An anomaly is where there is a disconnect between what you're seeing in terms of price action and what the volume is telling you. And what we also want to do in this live stream is to look at anomalies across the time frames. I'm going to focus on the slower time frames, and David is going to look at some charts on the faster time frames because the principle is the same. The main difference, of course, is the question of time. And what's also important is that what we have to remember with anomalies and when we spot anomalies, and once you really get into VPA, you really do become an expert and they kind of jump out at you. The temptation is to jump in, is to think, oh, that's such a strong signal. I'm pretty certain I can anticipate what is going to happen next, and you jump in. And the key thing is you have to wait. You have to wait. It is a signal. That's all it is. It's a pay attention signal because sometimes anomalies take time. Clearly on the slower time frames, even more so by virtue of the fact that you are on a slower time frame chart. The best way to explain this concept is to actually see it on charts where we've got a few different instruments to look at today. We're not going to focus particularly on one market because these appear across all the capital markets, across all the instruments. And the key for you is to be able to spot them. And then once you spot them, is to then wait and wait to see how they play out. And of course, with anomalies, often they happen at times when you can get trapped on the wrong side if you jump in too soon or you perhaps misinterpret this very important relationship between the price action and the volume. So I'm going to go ahead and I'm going to share my screen. And what I'm going to be looking at is the MNQ, which is the E-mini for the NASDAQ. The NASDAQ, obviously, NASDAQ 100, predominantly dominated by tech stocks. And it's got to the point now where I did a calculation and the top one, two, three, four, five stocks make up 52% of the index. So we have a huge concentration of just a few stocks which drive the index. And the top five stocks are Nvidia, Microsoft, Apple, Amazon, and Meta. And if those five stocks are not performing, then the index will be struggling. But that is a topic for another day. As I said, what I really want to have a look at is the slower time frame charts because the markets they're tired. I mean, it's August anyway, and we do expect volume to reduce in the summer. Liquidity goes down. People go on holidays. Certainly we do here over in Europe. So there are fewer participants, but the markets generally have got this feeling that they're hitting all-time highs, but they do feel tired. And we always say, David and I always say that when markets are hitting all-time highs and they're moving in this sort of quite a sluggish way, the predominant emotion from traders and investors is actually one of fear. It's the fear that at some point you're going to see a dramatic reversal. And goodness, every time you see a pullback and a correction, that's it. It's the bear market, and all the reasons come out why. This is the one. I've read that the market is in a similar state that it was in 1987 and Black Monday. I've also read that, my goodness, this is very close to the really big reversal that we had in 2000. Now, that may well be the case. And if you are going to see a reversal, we are going to see it first on the slower time frame charts, and we're going to see it through these anomalies. But as I said at the start, we really do have to be patient. And talking about emotions at the top, I said is fear. When we've had a correction and the market has crashed and it's coming and it's falling and falling and falling, the overriding emotion is one of hope. We hope that the market will stop falling. We hope that it will find a bottom, and then we can all breathe a sigh of relief and the market reverses once again. So that's just our observation. So here we have is the MNQ. And I'm going to look at two charts. I'm going to look at the weekly chart, and I'm also going to look at the monthly chart. But let me just first start with the monthly for an even longer term view. And this was something that I've been meaning to highlight for a while. If I just pull that over and you can see what I mean. Now, you don't really need me to tell you what we are looking at here. We can see the market, this big market reversal that we had here back in April. We had this very, very deep hammer candle with a lot of volume. It actually bounced off one of my key levels. For those of you perhaps who haven't been to one of these sessions before, these are levels that I have put in manually, and I use them simply as sort of staging posts and to give some structure to the chart. But that was when the point where we saw this market reverse. They had pulled back over the previous 2 months, and at that point, everyone was convinced this was it. This was the one. And in fact, that candle, that was the close of the candle. But when that was formed, the market fell even more, and it was only towards the literally the last days of the month when the price was driven higher once again, and the bear, we all avoided that big bear market, and it was simply another correction, and it was a dramatic example of buy the dip, if you like. What's been happening since? And remember, April, May, June, they are busy months, if you like, from a liquidity and participation level. So we see the market rising, and what do we see? We see the spreads of the candles. There's that one, and it's narrowing. And we also see the volume either falling or we had last month and the month before, we have flat volume. So that is a huge signal telling us that that something is going to happen. We can't say when, but we have to be on alert. So that is a very dramatic example of the kind of anomaly that we should be looking at. Now, when I went down to the weekly chart for this week, I found it quite interesting actually, because part of VPA is also looking at patterns, and we haven't dealt with a lot of patterns in these sessions, and it's maybe something we will certainly look at later. What we say about patterns, there is a hierarchy to patterns, and I'm talking patterns such as double tops, double bottoms, triple tops, triple bottoms, flags, pennants, etc., etc. And by hierarchy, I mean some patterns have a higher probability of developing and being well, developing. That's the best way. That's the way I can describe it. But ultimately, whether they succeed or not, or they fail, will still be tied to the volume that is around that pattern, the double bottom. Are you actually seeing enough volume coming in to be able to validate that pattern? That's the word I was looking for. And the reason I'm looking at this now is we have this up candle here and we have this candle at the end of this week. Now, this is really, really early. So please don't, this is just something that I'm interested in, and I'm going to see how this plays out, because this is an anomaly on its own. And what is going to happen next week? If this time next week we have a down candle, we're looking at an evening star, which is a very quite an important critical reversal pattern. But as I said, this is the danger. We see these patterns, and we are, as a species, we are a pattern recognition species. Patterns, they help us. They helped us to survive in our evolution. That they're kind of ingrained in us, but we mustn't be too quick to jump to a conclusion. But I just thought I'd mention it because I sometimes sort of use it as a test for myself to say, now hold on, I think this is what I'm seeing, but let's wait and see. And this is where we have to be patient, and patience is something as traders and investors we're not actually very good at. So that is the MNQ. I simply chose it. It's an instrument that David and I trade ourselves. It's also the instrument that we use a lot for teaching our students, because we find it's very deeply liquid. It's a 24-hour market. We have students from all over the world. So it's important to be able to access an instrument that will give us the opportunity to be able to talk through the price action at the live edge of the market. And those of you who may know already, we've been coaching and mentoring now for a little while. And one of the things that we have found quite surprising, that we've been told by some of our students, is that as far as they're aware, where some of the coaching and mentoring that we do is purely at the live edge. We look at historic charts, we look at examples, but when we're actually on a one-to-one, or in our case, a two-to-one, because there's two of us and one of them, we only ever look at the live edge of the market, talk it through with them, and then teach them, and then they have to repeat it back to us, which some of them find very, 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 very nerve-wracking. But once you understand what you're looking at and you've studied the material that comes with the coaching and mentoring, it really does make an awful lot of sense. Turning to the market sentiment at the moment, what you also need to be aware of is the volatility. We've mentioned volatility before. The markets are they're not volatile. In other words, they are complacent. We look at the VIX, and what I have here is actually is called the VVIX, which is the VIX of the VIX, and it's an index which gives us an insight as to whether the market is in fact complacent or not. And you have these levels, and you can see it's really sort of in a sideways at the moment. What I have here is the 200 MA. And the 200 MA is like I always call it a psychological level, because it's, even mainstream financial media write about it. And at the moment, on the weekly chart, it is actually still below this. So in a way, what is that telling you? Well, it is telling you that it is pressuring the 200, but it needs to go through that if the market is to reverse. And obviously it'll spike much, much higher if you have some major trigger for the markets to reversal. There isn't. What could that trigger be? Well, we had the PPI earlier on for the US, and there was a knee-jerk reaction on Thursday morning. Markets fell. The stock market fell pretty heavily, but it recovered. So doesn't seem to be too concerned about inflation, certainly doesn't seem to be too concerned about tariffs, certainly doesn't seem to be too concerned about geopolitical events. There's obviously the summit that's going on at the moment in Alaska. But often the trigger will come from left field. It's something that is out there. It's just at the moment it is a known unknown, in the words of Donald Rumsfeld. But what's interesting is that it is contained between the 200, and that will put pressure to the downside. If it goes down to the downside, then the markets will remain elevated. They will maybe continue to creep higher. More worry will come into the market. Paradoxically, they will become more complacent. So it's just this, we have this combination of factors at the moment, which from an investing perspective makes life very, very difficult. From a trading perspective, could make life difficult if you jump too quickly onto a signal such given by an anomaly too quickly. So that's that's really all I wanted to say on anomalies and on the slower time frame charts, because this is only a very short live stream, because the markets are in this very, very interesting state at the moment. They're looking a little bit fragile. What's coming on? What's coming ahead? I think we've got what's the PCE, the more inflation data. More importantly, from the Fed perspective, we have what's called the Jackson Hole Symposium, not next week, the week after, and really the markets really get into gear once once Labor Day's over, which I think this year is at the beginning of September, and then the talk between now and then will be whether the Fed cuts again in September. There's a whole narrative surrounding the Fed and what they'll be doing with the reverse repo and their QT and et cetera, et cetera. Everything I talk about, that David talks about, is actually contained in our education programs, because it's not just about becoming proficient in VPA. It's understanding the other drivers of the market and how they contribute towards framing the narrative. Fundamentally, it is chart, it is understanding and becoming a real VPA master, understanding the significance of anomalies, understanding how to spot them, understanding how you have to be patient before you make a trading decision. But we felt that when we put the program together, it was really important to put in as much as possible, and certainly what we felt was important for traders, and it's both traders and investors, because the only difference between a trader and investor is the amount of time that you spend in the market. And we all start as traders, but eventually we do all become investors in some shape or form, whether it's for short term, medium term, or longer term. The underlying methodology, the underlying principles apply to whatever time frame you decide to trade, right? For those of you who were here last time, and we looked at the pound Aussie, and again, it was looking at VPA and the significance of significant levels at inflection points on the chart. And we were looking at certainly if you're a forex trader, if you wanted to trade the slower time frames, certainly for a cross pair, that is what you would be. Really, for a cross pair, is probably the slower time frames you would have to trade because of the spread. And if you are going to go into the slower time frames, here you have to have a little bit more of an understanding of the fundamentals and the monetary policies for the individual central banks. And here we have the BOE and the RBA. And when we had the session, the price action was around about here at 2, this exchange rate here. And what I said was it will be really determined by what the two central banks were going to do. We were speaking ahead of the interest rate decision for the Bank of England. And then the following week, there was the RBA. The Bank of England did cut, but said they were concerned about whether cutting further because we have an inflation problem here in the UK. We have a stagflation problem, but that was it. But when the RBA, they also cut and they completely reversed their position from earlier on in the year where they were a little bit more hawkish. They said, oh yeah, there were probably more interest rates cut coming. And what does that do? Ultimately, from a fundamental perspective, it is interest rates which drives the value of a currency. The higher the interest rate, usually that will strengthen the currency, which is why we saw this kind of break higher away from this, as I said, this inflection point, and we've had a really nice move. What's interesting is the volume. So whilst that has, from a price action perspective and from a purely a technical chart perspective, yep, that's done what it's supposed to have done. But what I don't like is I don't like to see this. So maybe it's not going to go very far. But it's kind of played out how we said it would likely play out, dependent on what the two banks were going to say. Right. As always, if you've got any questions about anomalies or anything VPA related, just put them in the chat box, or you can drop me an email at anna@annacooling.com.
Hi, everybody. Good to see you, and a very warm welcome from me. And if Anna stops sharing, I can share my screen, and I've got one or two anomalies that I want to share with you. So let's just click on that one. Hopefully that's coming up. Just having a look at Anna's screen. Yeah. Okay, I've just got a couple of simple workspaces here. The first is this is TradingView. In case you're not familiar with it, it's just a great platform because it's browser based, so you can access it from anywhere in the world, wherever you are. Don't have to download it. This is 6 of the majors. On the top left, I've got Meta, Broadcom in the middle, Apple, and bottom I've got Tesla, Nvidia, and Palantir. And the reason I've got Palantir is because, well, two reasons actually. Sorry, that's not Palantir, wrong one. Let's click on that. There we go. That's Palantir. Two reasons really. First of all, because it made us, it brought a smile to our faces because in the UK press, Palantir was highlighted in one of our local or one of the national papers here as a stock that you may be unfamiliar with and therefore one to invest in. And for those of you who've been coming along regularly to webinars in the past that we've done over the years, you'll know that we always say the same thing, that once an investment or a market opportunity hits the national press and is seen as an opportunity for you to buy, then you can be pretty assured that it's getting to a top and may well have reached the zenith of its travel. So it was interesting to see Palantir that was touted as a stock that you have never heard of, which of course we have, and I'm sure you have. Most people in the industry have heard of it. It's a stock we've invested in. We invested a long, long time ago when it was down, when it was breaking out through this level here, because one of the patterns that we look for round about here, I think it was 32, 33, $34, something like that. And we also trade it on a regular basis as well because it has great volatility and it moves around intraday. So it's a great stock. But the one of the patterns we look for always is we look for these this sort of saucer shape. Now, on this occasion, this was a relatively new company, but it formed that sort of pattern. And what we were looking for was the breakout through this level around about here, I think a little bit higher maybe, around about the sort of $30 a share price. And once it starts to break through there, and once you start to see rising volume, which we did, that was all confirming really that we were seeing a nice move, and on up we have gone. Now, bear in mind this is the monthly chart. What we're seeing here, and we're talking about anomalies, the first thing that strikes you is that we now have the opposite of what we were seeing here, which was nicely rising price, no minor pullbacks even in that trajectory, almost up to $80, $90, and the price is effectively rising with it. Then we get the weakness coming in on this candle. This is clearly an anomaly. Any hammer candle or shooting star candle is an anomaly. Why is it an anomaly? Because if that were not the case, the price here should have closed, given what has been going on. And if we took that as a benchmark candle, for example, and said, well, that's our benchmark, doesn't seem unreasonable to say that, where we've got a nice wide spread, which is what, I don't know, 40 or to 60, so it's quite a big spread. So if that amount of volume, sorry, this amount of volume is what is required to project the price from $41 up to 67, so $16, $20 rather, sorry, where we gone from 42 to 68. There we are, $26. So if this is the amount of volume required to propel the price that far, why is it that 1.33 times that amount of volume, we've seen nothing? In fact, we've seen a tiny move and a big wick. And the only conclusion you can reach is that that's anomalous. Why is it anomalous? Because if it were not, that candle should have ended up somewhere up here based on this, and it hasn't. It's ended up here. What do we infer from that? We infer that there's heavy selling in there, because that's the only thing that can have created that candle, because the buyers have come in, they've got it to a point, the insiders and market makers have got it to this level, and then they're selling into weakness, so the price has been pushed down, pushed down, pushed down, and we have all this huge amount of volume as a result. So there's weakness. But what I really wanted to focus on was the last travel of the price from April. So we've got April, May, June, July here. This is August, so bear in mind we are just over midpoint of the month. So obviously we've got to wait until the August volume is completed at the end of the month. But what's significant is the fact that from April, May, June, and July, we had significantly falling volume and we had rising price. And that in itself is anomalous. We tend to think of anomaly when we're looking at single candles and single volume bars. But anomaly also applies to groups of candles. And this is just a classic example of what I mean by anomaly. So looking at Palantir doesn't give me a very warm feeling about whether this is going to carry on much longer. What will be interesting will be to see the volume in August. Now, the only caveat to all of that is you've got to remember that volume can be seasonal. So when we're in the summer months, and it's quite interesting actually that we're halfway through the month and the volume looks as though if it's going to carry on, it's going to be higher than July. But what I was going to say was we always have to bear in mind that when we're looking at these slower time frame charts, we've always got to take into account the seasonal variation that we tend to see in the summer months, and you will see it obviously around Christmas periods, things like that, where we have long holiday periods. Markets tend to shut down around the sort of 11th, 12th, 13th of December and don't really get underway until the sort of second week in January. Volumes are very light. It's what you expect to see. And to some extent, you expect to see that in the summer months. What I don't expect to see is this effect in what should be heavy trading months of April, May, and June. And this is falling, and particularly into July as well, which is a long month. Also, the spreads of these candles are not particularly wide, which doesn't encourage me much either. So Palantir, from that perspective, is certainly one to look at. Now, talking about candle patterns and anomalies, if we go up to Broadcom on the monthly, this is another classic example of what I call the catenary effect of price. And by that I mean the price is creating, imagine years ago I was a civil engineer, so I was very much into bridges and bridge construction and that sort of type of thing. Imagine this is the arch of a bridge. It's half complete. So the bridge is now 2/3 complete, getting up to the apex. And what you're seeing purely from a price perspective, we're not looking at this in any other perspective, but purely from a price perspective, what this narrowing of spreads means is essentially giving you a clue that that trend is weakening. And it's weakening because these spreads are narrowing. And this is just a classic example of what I refer to as the catenary price action, where the price action is flattening. It's coming over in a curve and it's coming up to the apex. Now, it doesn't automatically assume that we're going to see the market collapse, in this case, this stock. What it does mean is that we're probably going to see some congestion building at the very least at this point, and possibly a reversal in due course. What's also interesting about the volume here, again, similar to Palantir, it's kind of falling away. It doesn't look very strong. And it's just another example of looking at anomalies. Now, what I'm going to do now is I just want to flip over, go completely the other way. We'll go to 3 minute. These are all linked, so they'll all change together. There we go. And what I want to go to is Tesla. Let's just pop that up full size. There we are. Just make it look more realistic. There we are. Let's pull that down a bit. Okay. And let's just clear there we go. Okay. So this is today for Tesla. So if we scroll right back to the open of the market, which is 2:30 our time, the first candle that comes in is anomalous. It has to be anomalous. Why? Because again, if this were a genuine move, we would see the price up here somewhere, ton of volume coming in, and the price has gone nowhere. So the market has tried to rally. The insiders are opening the doors. They are applying volatility. For the first, this is a classic price action in the first 15, 20, 25 minutes, 30 minutes, whatever. It varies from day to day, but the one constant is volatility. And this is with the volatility indicator, which signals the fact that price has moved outside the average true range, and from which we can assume one of two things, that we're either going to see a reversal or we're going to see congestion. But nevertheless, we will see volatility, and it's reflected on the 3 minute time horizon. So this is an anomaly, and that's a single candle and a single volume bar, obviously. But what I wanted to show you really was down here. As we move across, just phase it out a little bit, because we see anomalies everywhere and in all time frames. And once you start to look for them, they will jump off the chart at you, and you'll see them, as I say, in every single time frame. And let's just look at some very simple examples. We had some congestion, and we get our first candle here on potentially what looks to be setting up to maybe a rally, a breakaway from this congestion phase. Not unreasonable. Volume, I've scaled out the volume from the start because it tends to distort everything. So the volume on that candle looks okay. Volume and price in agreement, generally speaking. Then we come to the next candle. Higher volume, and the price has gone nowhere. So is this an anomaly? Of course it is, because if that were not the case, then if we take this as our benchmark, and benchmarking is something we do constantly as part of VPA, because what we're trying to do is we are trying to establish within the chart, within our time frame, within our session, whether the volume we are looking at is correct. In other words, it is in agreement, or is it an anomaly? And when you're on these fast time frames, we don't have to worry so much about sessions and are we looking at this session, are we looking at a UK session, whatever, because we can compare any of these volume bars on here because it's all within the same time frame or within the same session, the US session. So the second volume bar comes in, it's much higher, and yet the price has gone nowhere. And then we get a third effect, exactly the same thing. That hardly would give you much confidence that what we're seeing is a continuation of what we thought initially was maybe a breakout, because clearly we've got what Wyckoff referred to as effort and result. In other words, we've got more effort going in here and much less of a result. In other words, the price has hardly moved at all, and the same here. So you will see these everywhere, these anomalies we're constantly looking for. And VPA, when you distill it down to its bare essentials, is simply that. It is identifying whether price and volume are in agreement or whether they are in disagreement. In other words, an anomaly. And that's really all VPA is about. It's about understanding the relationship between price and volume, whether you're looking at it on individual candles, whether you're looking at it in groups of candles, and then from that, you then can conclude and come to a decision from your analysis as to what is like to happen next. And as Anna said, what we do in the sessions with our students is a lot of live edge trading. This is in hindsight, but we do a lot of live edge stuff where we read the chart at the live edge as the bars unfold bar by bar. Here's another little anomaly. If we look at this little price move here, we start off, we get a lot of volume coming in. Okay, it looks a bit suspicious because we've got a lot of volume here and not so much here. But we carry on to the next one, which is really confirms that candle. So the two of those together, you can say, well, they're both pretty much the same size. Remember, this is an art. This is not a science. We're not looking at this from a metric rule precision. We're not looking at it from a slide rule perspective. We're looking at it from an artistic perspective. And we can say these two candles are pretty much the same. This one's maybe a little bit bigger, but the volume is pretty much an agreement between the two. So that looks fine. The anomalous candle is this one, because whilst the volume has dropped a little bit, the actual spread on that candle is very, very narrow. And if these two candles are correct, then what we should have seen here is at least a candle that came down here somewhere, and yet we haven't. We've got a narrow spread candle. So what does that tell us? Well, it tells us there must be a degree of buying in here, because if that were not the case, if this was selling as it was in these two candles, this is selling, this is selling. Now we have some buying coming in. Why have we got some buying coming in? Because the price has compressed. That's the only logical conclusion that you can arrive at as to explain why it is that the volume that is pretty much the same as these two, and yet the price is done what it's done. And that's the only conclusion you can arrive at. And therefore, from that, you can conclude one of two things. Firstly, that we are likely to see a reversal, or we are likely to see some congestion. And in this case, we get congestion and we do get a mini reversal as well. But what it gives you is a heads up, because if you were trading this short, at this point, the alarm bell would be ringing, because what should be happening here, certainly in a price waterfall, you should be seeing widening spreads, which is the other aspect to a price waterfall where you see price selling off hard. You want to see widening spreads and you want to see rising volume. And you've actually got the opposite here. Whilst we've got decent spreads here on the first two, and that looks encouraging on this third one, that looks discouraging to say the least. And at that point, I'd be paying close attention and I'd be sitting through this waiting. I wouldn't necessarily be out. I'd be sitting here, I'd have a level here and I'd have a level down here as my triggers to decide what to do. If it breaks the downside, fine, I continue holding. If it breaks the upside, I get out the trade. Simple as that. And the other aspect that also gives us information about what is like to happen next is this little candle here, because what this little candle tells us is that within an area where we've seen high selling in these red volume bars here, what we're now seeing is we are seeing volume falling away, and also in these candles here, which are very narrow, and the volume, as you can see, the red volume is falling. And then we have another anomaly here where we have higher volume and the same narrow spread. So that it's that selling is constantly being absorbed and declining, and therefore the expectation that the move is going to continue lower seems unlikely, and on balance more likely to move to the upside. It doesn't go a great deal farther. It doesn't go very far in terms of the trend up, but nevertheless, you know, from where is it, 327 up to 329, may be enough for you as an intraday day trader. So this whole business of anomaly can apply to any time frame. It applies to VPA universally. And the beauty of the VPA methodology is that whatever time frame you learn it in, whatever time frame you practice it in, the principles, the analysis, the conclusions are all the same. It doesn't matter whether you're looking at a monthly chart as an investor or whether you're looking at a 1-minute chart as a day trader or an intraday scalper. The application of the methodology is identical and works in exactly the same way. Whatever the instrument, whatever the time frame, It's just a perfect. It provides the foundation stone for everything else. Now, whatever else you do in your trading, at least if you have volume price analysis as your foundation, it's like the foundation of a house. You have a cornerstone, you have something solid on which everything is built. If you then thereafter want to bring in Fibonacci, you want to become an Elliott wave trader, you want to trade indicators, you want to trade in particular styles, it doesn't matter, because everything, your decision making is based on the volume price analysis methodology, and everything else then becomes a complementary aspect to that methodology, which is why we have the indicators, which give us information. The accumulation distribution helps us in terms of levels. VPOC helps us in terms of levels and where we've got strong volume on the y-axis, where we've got low volume nodes and high volume nodes. But those indicators are secondary. Our primary focus is on the volume price analysis methodology, which gives us our decision making, and then everything else is complementary once we've made that particular decision. Just to highlight where all the bits and pieces are, you can find everything in terms of the programs over on quantumtradingeducation.com. And we have 2 programs there. We have one for stocks and we have one for forex. And as a thank you for coming along this evening, if you are interested in joining either of those programs, we have a little discount, a 20% discount. Just use the code LS20%. If you email the help desk at Quantum Trading, that's helpdesk@quantumtradingeducation.com, then the support guys there will arrange for you to have a 20% discount on the price of either of those programs. That's just as a thank you for coming along this evening. So take advantage of that. It's only for the people who've come along live. And finally, over on Anna's site, this is where you'll find access to the coaching and mentoring program. And in addition to that, I know a lot of people asked about this. We do have the full color version of the VPA book out now. And also in January this year, Anna recorded the audio version, which has been extremely popular. So lots of good feedback on those. You'll find those over there as well. And finally, just on the indicators, you'll find those at Quantum Trading for the 4 platforms, MT45, NinjaTrader 7.8, TradingView, and also TradeStation. I think we're done. So I hope you've enjoyed this evening, and we will be back again very soon next week. So have a wonderful weekend ahead, wherever you are in the world. Enjoy with your friends and family, and we will see you again soon, and bye for now.